give you guys a good understanding. You know, after this live call, you're going to have a very good understanding of what extended sweep is. Super simple, just a small tweak that's going to really help you guys out, and you'll see the results that me and Scott have been getting, and they've been very, very fruitful. Yeah, let's jump straight into it. As you can see on the left here, we've basically got the basic entry type. You know, we look at the 15-minute chart inside session, and if we're looking at an external or an internal fractal sweep, we're looking at the candle that took liquidity will be in this buy scenario. We'll be looking at putting a stop order, you know, on that candle high. And no matter previously, no matter, you know, if we push lower, you know, our order is going to stay in the same place, but we'll just extend our stop loss. Now, it does work, and it is quite good. But however, if we can reduce the size of this stop loss a little bit, that's going to allow us to TP earlier. You know, because if our stop loss is smaller, therefore our take profit is going to be smaller because we're targeting 1 to 3s. So the basic entry that you should all pretty much be familiar with is like so. And you know, if you were to move over now to the extended sweep, if we've got that same scenario where we've got this particular candle, previously our entry would be on the high of this 15-minute candle, you know, but you'll notice sometimes we keep pushing lower even after the liquidation of this. We push lower and push lower. Now, this is why we call it an extended sweep, because we are extending our sweep down and placing, again, a stop order on the high of the candle. Yeah. So it'll become more apparent when I show you some examples. So, for example, here we're pushing lower, lower, lower. And the candle that forms this lower low, we want to put our buy stop in this scenario on that candle high, and then eventually it should, for example, do something like that, and it'll tag us in. Now, you're merely, if you look at these 15-minute candles, you're merely playing a lower time frame range, and then rather than using the lower time frames, you're just using the 15-minute candles and extending each range down. And then when you get tagged into the trade, it's merely breaking out of that range and carrying on higher. Yeah. So it's lower in this buy scenario, going lower, lower, lower. And you kind of got to be a bit more on the ball, if you like, with this. You know, because each candle's every 15 minutes, and if it keeps pushing lower, 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 you kind of need to place your orders accordingly, and again, place your stop loss accordingly. That's why we like to use the MT4 Trade Manager, where you can merely drag and drop your, for example, like here on the Trade Manager, you can drag and drop your buy stop and your stop loss and your TP. You know, super useful for things like this. Tom, yeah, so no specific amount. I found optimally, or the most optimum amount of candles, it kind of between the 2 and 3. Again, do your testing. In my testing, I never took into consideration how many candles it was. I just ensured that it was inside session and the entry was valid in terms of a higher time frame entry. Again, Adrian, don't worry about it. I never had any impact on my results. Doesn't matter what the candle looks like. Again, you'll notice that from your testing. That's just a brief example of just a little breakdown, if you like. Let's have a look at a chart example here. Again, in a buy scenario. In a buy scenario, we're looking, for example, here. Yeah, so we've got if we're looking at this large candle here that sweeps liquidity. Yeah, so normally our entry would be up here, but we wouldn't get any tag here, and we'd just be moving our stop loss. And at this point, you know, you're over 30 pips. You're not going to take that trade anywhere on EU because it's, you know, it's quite a significant stop loss on EU. So, you know, and then what happens next? Bearish candle extending the sort of range down. So at this point, your buy stop would be here and your stop loss below the low. There's no tag. we print a new candle, and it keeps, you can see that here. Look at these candle, zoom in, these candle lower low keeps on happening, and then eventually it breaks out and breaks out of the high of that candle. Yeah. So lower, 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 and then you're just going to have to, what we was doing was moving our orders as it goes down, and then moving your stop loss accordingly. So yeah, you can see lower keeps on going, and this is why it's called an extended sweep, because we are extending the sweep down. Yeah. Yeah, we break out of the range and trade higher. And then that one, yeah, hits TP and reverses. Quite a nice example there. Just another one here. Is a buy example, but again, it's quite a good one. So we have our external range low or fractal low. And previously we would be having our buy stop here, stop below the low, and assessing or moving our stop loss accordingly. This would be a no-go because it's over 50 pips anyway, so definitely won't be taking that. But it pushes lower, then we get, you can see this little indecision here. Now note this on your testing, what happens here. So we, instead of being consecutive lower lower, we're getting a low and then we're printing a high. It is valid, however, it is a better scenario when we continue making lower lows and then form that breakout, as you can see down here. This is almost like it's giving that low, high, low. You'll notice it on your back testing. These are, they're valid, but it's better when we continually make those lower, lower or higher, higher sort of pattern in the candle ranges. So we're going low, and then again, we print another candle. We've got our high and low range. And then this bullish candle here prints another lower low. And then as it prints, we are going to be placing our buy stop again, following it down, and then buy stop here. And then you've probably got about 15 minutes to get tagged into that trade. So more than enough time. Stop loss below the low, and it hits TP. A good example of how you would not have taken this trade because the stop loss was too big. Whereas now you can take the trade, stop loss is smaller, and it hits TP. What we found is it's more fruitful, more available. It's going to open up more opportunity in the market pretty much. And, a lot of people are trading different pairs. We found with this, you kind of don't really need to divert from two pairs because there's going to be enough opportunity with the extended sweep and the counter trend trading. EU and GU is going to give us a lot of opportunity. Yeah. Obviously, if you're in a different time zone and, you can't trade, for example, some people are trading AU in Asia, which I know works very well. So, that's just fitting their schedule. So in a normal case, doesn't matter how many candles form before tagging it. So Nick, do you mean, for example, like here, if we was to place a buy stop here in the normal entry, the basic entry that we look at, would it matter how many candles that we're playing down? I think that's what you mean. Yeah, so it doesn't really matter. You kind of just got to assess it as price develops. Because like in that scenario, yeah, there's probably 4 candles, and you're going to end up having a 50 pip stop loss. So you definitely, in my opinion, don't take that trade because like 50 pip stop loss, that means the TP is going to be 150 when the daily range on EU is 60 pips. So, you kind of in the basic entry, you've got to think on your feet and be aware of, the daily range and stop loss sizes and whatnot. Whereas with the extended sweep, it allows you to really compress that stop loss size down, and it opens up a bit more opportunity. Luke, would you stop moving the order down? Yeah, so if we hit a 4-hour low or high, we've interacted with the next available liquidity pool. Therefore, we will wait until candle closure because we don't know if it's going to be. We don't know what our higher time frame bias is going to be. Is it going to be an NFT? Is it going to be unconfirmed? Or so we need to sort of remove the trade idea off the table and reassess on candle closures in that scenario. In this example, why isn't the stop above the last bearish candle? Last bearish candle, yeah, it's there. Because, oh, you mean in here? Because this doesn't matter if it's a bullish candle, it's made a lower low. Can you see that? The candle lows, this bullish candle is lower than the low of this candle. Therefore, it's a lower low range, and we're looking for a breakout of the high of that range. Yeah. Yes, it was in session. You probably noticed, can't remember if it's on a live call, but there's some basically we're creating a new trade plan, advanced trade plan. It's going to be a new video with a few different factors. This is going to be one of them, extended sweep. We're going to have the counter trend trading in there, but also we've extended the sessions. For those that didn't know, it was on a live call a couple of weeks ago, I think. So yeah, our London session starts at 7:30 and the New York session at 1 p.m. So yeah, like I said, it's just this extended sweep sort of trade refinement is going to open up more opportunity. Like I said, we don't feel the need to trade more pairs unless you physically can't hit London or New York session. Then by all means you can trade other pairs. But with the results we're getting, the figures are quite significant. The backtesting results that me and Scott posted were with entry refinement. So it's very fruitful. There's going to be more trades, hopefully more profit from you guys. But again, make sure you do adequate testing. I hope. I don't see anyone taking extended sweeps tomorrow morning unless you've done an all-nighter and backtested the whole of EU or GU for 2022. So yeah, again, it's quite simple in its construction. And when you backtest it, you're gonna understand it more. It's gonna sort of sink into your subconscious. So it's okay us telling you these finer details, but really you need to get on the charts. You need to see it for yourself, because that's more powerful than anyone could just mention something. So I urge you to go ahead and do adequate testing on it. Any questions on the trade refinement or anything that's been going on the past couple of days on EU and GU? Yeah, hopefully. I mean, I want you to all test it and post your results in the community backtesting. That's what it's there for. Don't hold back and don't feel like you can't post in there because you're getting different results. It's an individual journey. If someone's getting better results than you just figure out why. Why they're getting different results, and you can do that by the community backtesting pretty much. Some of you might already be trading the extended sweep potentially. Again, if you've been quiet because you've been trading slightly different, don't hold back. Everyone is here to learn. Yeah, that's it, Nick. I know it's a shame, but it's the world we live in. Not convinced with the first trade. So the first trade example, don't understand it. No, it's pretty. Oh, you don't see. I see the sweep happen before session. No, like I said, we've extended our London and New York sessions. It was on the live call a couple of weeks ago. These are now 7:30 and 1 p.m. And in terms of the sweep, so the liquidation looks like a news candle. But if we're looking at this fractal low, we get a liquidation of the low. Buy stop initially will be here. We don't get that. It continues lower. This next candle prints. Prints a lower low. Again, prints another lower low. These candles are just going lower and lower. Again, lower low. So in this scenario, we're following it down, putting a buy stop here, stop loss below the low, and we're looking for a breakout of this range. Yeah. But yeah, it's in London session because it's the pre-London session at 7:30 or an extended session. No, you can hit internals as well. Again, go ahead and test it. Externals obviously are going to be higher probability, but internals work quite well. Yeah, again, this sweep, for example, here is at 7 a.m. and it does make sense. It's higher probability for this trade to be inside session, but if it's setting up nicely, would you take the risk? You got to ask yourself that, and you'll pick that up from your testing. Like I said, I can push through loads of examples on the chart. I just picked out two ones that were fairly decent. But you'll pick up your own finer details, and you'll understand it so much more just by getting on the charts and breaking it down, really seeing it play out. Yeah, don't worry about it if you don't understand it now. You can rewatch the content. This little example up here is quite useful. This call was recorded, so yeah, you could go ahead and watch it back, and once it's solidified with your sort of subconscious that you understand the entry, go ahead, jump on the charts, back test it, and yeah, that's where you're really going to learn. Like me telling you now is like 5% of what is actually going to solidify in your brain, in your subconscious. It's getting on the charts is going to be the main driver for you guys. I do think about it, Nick. The dark charts were good. I kind of missed the white, I don't know. Yeah, I did feel like that, but now I've got some eye drops because I was getting really dry eyes, and when your eyes are dry, bright lights can be quite intense or sort of white colors. So yeah, it's not too bad now, but maybe one day I'll switch to dark again. Thomas, yes, external sweeps are on the trade execution video, and internals, there is no content around it. There is content coming. If you watch, I'm pretty sure it would have been maybe April, one of the live calls that Scott did on a Tuesday. I can't remember which one. April time. But if you go ahead and just flick through some of those, you pick up some info. But yeah, there is internal range content coming out, but we prioritize the counter trend trading and the entry refinement. Yeah, no, I don't know. I'm preferring white at the minute, but we'll see. Depends how my eyes can take it. Yeah, one session definitely could be enough. Results April 2022 for me, 71% win rate, 29% growth on the account. Most of the trades were taken April. Most of the trades were taken in London session. That's April 2022. So Depends which session you trade. That's on EU. Yes, so the 12 months of data results compared to the original T-part, that's all going to be coming out shortly. Probably next week sometime. I'm doing EU, Scott's doing GU. So Lou, with that question, what I'd say is it's going to be higher probability for it to happen inside session, for it to all to happen inside session. You know, stack those probabilities in your favor and get on the charts and get back testing pretty much, and you'll figure out, oh, okay, if like that trade there, if the sweep happened at 7, can I take that entry, you know, come 7:30 session open? How many times does this play out? How many times is it profitable? Do I want to include it, yes or no? And it'll be answered for you pretty much. Not 39, 29, but you know, what's 10% when you're hitting 29% anyway? So yeah, on average, it was around 20% a month over the year. Yeah, something like that on one pair. So yeah, bag of shit. So yeah, it's gonna, you know, it's just gonna open up a lot more availability, a lot more potential for profits. Yes, there's going to be more trades. For example, that April 2022, I think I took 14 trades just on EU with a 71% win rate. So, you know, you don't, in my opinion, I don't want to open myself up to too much risk exposure. So like having like, for example, AU and dollar Swiss, I'll be trading 4 pairs. You know, that if I took 14 trades on each one, that's a lot of trades. You know, I don't want that amount of exposure to the market, you know. So yeah. How many trades are you trading actively? What do you mean? Like how many trades am I taking actively? How many pairs? Ah, right, yeah. 2. EU and GU. That's it, Pat. Yeah, 5 to 10 is definitely the sweet spot for sure. Pips maximum EU. EU is what I trade most. I pretty much won't take anything over like 22, because if you think about it, the average daily range on EU is 60 pips. So if your stop loss is over 20, the probability of that playing out over the average daily range is it's just reduced straight away. That question will get answered though if you did adequate backtesting. Yeah, over 22-ish, 22, 25 is too much for EU. GU is a little bit different, has a lot bigger daily range. You know, stop loss is bigger on GU. Yeah, definitely. Yeah, definitely, Adrian. And third, I mean, it's a good rule, but you kind of don't be so rigid with it. You don't say, oh, okay, I'm just having a 10 pip stop loss in every trade. You know, you can't do that. You need to be a bit more fluid. You need to react how the market's printing. Like for example, here, I didn't know it was going to be a 19 pip stop loss until that candle closes. No one does, pretty much. So, you know, it's don't limit yourself to a certain stop loss size. I'd say just assess each situation and just weigh up the probability of it playing out. If it's a 50 pip stop, is it worth me risking my account, risking 1% exposure on that trade? Probably not.